A last hour fall sees the Lal Street end flat on monthly expiry. Nifty and Sensex end 0.25% lower. Nifty fails to hold 26,000 and mid-caps outperform the blue chips.
Yatra Online skids 6% after CEO Dhruv Shringi resigns due to personal reason. In a conversation with CNBC-TV18, Shringi says that the CEO change was planned and that would unlock new growth opportunities. The stock recovers.
Shot in the arm for Dr. Reddy's after the EU drug regulator gives its approval to market its drug denosumab. The stock is up over 1% and also the top Nifty gainer today.
The stock of restaurant brands Asia, the owner of Burger King franchise in India and Indonesia, jumps after CNBC-TV18 reports that the promoter Everstone Capital may sell its 11.3% stake and exit the QSR player.
Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to get up for the next trading day. I'm Sonal Bhutra and with me today is my colleague Vivek Iyer. And Vivek, it was expected to be a volatile day. That is something that happened, especially during the last hour of trade. We did see that fall from the highs of the day as well. So Nifty ended with a cut of 70 points. We did have Bank Nifty, which was absolutely flat with some negative bias, but it was the mid-cap side of things that looked really good. In fact, the advanced decline ratio was in favor of declines by a small margin, and this has been a problem point for the market, right? The market breadth, but that today supported the mid-cap moves. PSU banking index did really well, 1.4% higher there. We did have the pharma index also higher in trade today, but the Nifty realty index, that was the top gainer with gains of around 1.6%. But yes, some profit booking in IT and also FMCG, which did not support the market.
That's right. Good afternoon, Sonal. Like you mentioned, expected to be a volatile trading session, especially in the last half hour of the session, where I saw high rollover activity is when you did see the Nifty take a significant tumble. What also underperformed today was the entire PSU pack. So all of the PSU stocks today, especially the OMCs, were something that did see selling pressure throughout the day. Names like HPCL, BPCL, all of them did end the day with significant cuts up. But moving on, here's the lineup of what we have in store for you today. We start with the top movers and shakers of the day with Hormaz Fatakia. The top stocks that were in focus today are Yatra after the CEO resignation and talks about Everstone exiting restaurants brand Asia. And also in focus, major oil marketing companies. Last but not the least, we'll delve into the key market events to watch out for in tomorrow's trading session. Well, now on to our first segment of the day. Hormaz joins in from the big wall with the top movers and shakers of the day. Hormaz, over to you.
Third straight day. The last hour jinx refuses to leave the bulls, and that was the story of today's session as well. But one pocket that bucked the trend, as you all mentioned, was the PSU banking space. All the constituents of the index ended with gains in today's session, led by Indian Bank, led by Bank of Maharashtra, and the smaller names as well, with Canara Bank, Bank of Baroda, even SBI ending the day with gains in today's session. Some of the digital-oriented names didn't do so well in today's trade, be it Tata Com, be it Swiggy. Some recovery from the lows of the day, but still losses of anywhere between 1 to 3% in today's session. A segment that bucked the trend, and convincingly at that, were the new listings. And Grow, after some very choppy moves, was up 5.5% today. Capillary, a new listing as well, 15% higher on that stock. Pine Labs continues to move higher, and Physicswala too, seeing a bit of buying interest emerging from lower levels in today's session, gains of 5%. And lastly, stocks that ended at a 52-week high in today's session. Despite the volatility, Aditya Birla Capital was up 4.5%. AU Small Finance Bank did well, as did Federal Bank. So some of the smaller financial names contributing to the gains. Can't say the same for a lot of the larger ones.
Okay, some interesting names there. Thank you so much for joining us as always, Hormaz, and taking us through those stocks which were buzzing in trade. Let's take the discussion forward. I am now joined by Siddharth Rai Mangla, Senior Research Analyst at Stockbox Technology, and market expert Anand Tandon. Gentlemen, good afternoon. Thank you so much for joining in. Siddharth, let me start with you. Of course, volatility is expected on the last day of the monthly expiry. What are the charts suggesting now? Will we see an up move from these levels?
Hi, Sonal. Good afternoon, and thanks for having me, first of all. See, Sonal, after what we saw yesterday, there was a weakness in the second half yesterday. So it was very important for Nifty to go back above 26,000 in the first half itself today and spend some time in order to get back the momentum. But it did not happen, and the weakness started coming in from there itself. It just got accelerated because of the expiry effect, and as Nifty came around 25,950 and spent some time there, a lot of unwinding took place in those put options, put selling, put writing positions. So which is why we saw this accelerating below 25,900. I do think that now the doors have opened for further downside towards the next important levels, which we should be looking at are 25,750 and 25,700, and because those are the next important supports from here for Nifty. So a little more downside can be expected in Nifty. The index does not look very good, at least as long as we are below 25,950 on the index.
Well, thank you so much for that, Siddharth. Well, now moving on to a stock that recovered significantly, and that was the CNBC-TV18 Impact. Yatra Online, remember, started the day with a 6% fall after its CEO, Dhruv Singh, resigned, citing personal reasons. However, the stock recovered by the end of the session on the back of the fact that the management joined us on the channel earlier and assuaged investor comments. Mangla Malu is here with all the details.
Well, Yatra was in focus today, opened lower as the management changes actually surprised the street on the negative side. The CEO, Dhruv Shringi, actually tendered his resignation for personal reasons with effect from November 24th, which is with immediate effect, and the company went ahead and announced the replacement as well. Siddharth Gupta has been appointed as CEO with effect from November 25th, which is today. Now, Dhruv Shringi has also been elevated and appointed as Chairman Board of Directors, but it was the suddenness of this which this was a planned move, and going forward, the appointment of Siddharth actually allows the company to go ahead and expand their B2B vertical, whereas Dhruv himself will be looking at opportunities for the company's growth beyond the core areas, as well as look at some M&A along with international operations as well. There was a smidge of a recovery post the commentary coming in from the management, but thereafter, still, the stock ended largely lower.
Okay, all right. Big recovery from the lows for Yatra Online. Let's get an Anand Tandon on this conversation. Anand, do you like Yatra Online, or do you like the peers, something like an Ixigo, which has been getting some funds as well?
Well, I don't like to comment on individual stocks, but generally the travel space has been doing well. Ixigo, of course, has performed exceedingly well. The challenge in most of these kind of companies is to find margins which are sustainable. Don't forget, companies like Yatra are still struggling with single-digit EBITDA margins, and that is something, because of the kind of business you are in, that will continue with the competition coming through. The question would be, where are you going to protect those margins from? That said, this is probably an area which is perhaps a little less expensive than many of the other online plays that we see in the market. So from that point of view, given the fact that the growth trajectory is fairly good, you might want to be somewhat exposed to this area.
Take your point completely there, Anand. The other stock in focus today was Restaurants Brands Asia, the owner of the Burger King franchise in India as well as Indonesia. Remember, yesterday, just prior to market close, we had reported that the promoter Everstone Capital was looking to sell its complete 11.3% stake and exit this particular QSR player. In fact, what we understand from our sources is that number one, Everstone Capital reinitiated the process to completely exit the stake. This was after they had put the plans to go ahead and do a divestment at the end of last year. Now, this was on the back of the fact that there was soft interest that Everstone received from a large family office of a listed company in India, as well as a few private equity players. We understand that bids have come in at a premium to the current prevailing market price, and we also understand that when you're talking about this particular deal, in case it fructifies, it's important to remember that it would trigger the open offer as far as the stock of RBA is concerned, given the fact that this would be a management change. We reached out to both Everstone. They refused to comment, as well as Restaurants Brand Asia, who are yet to respond to our queries. But Siddharth, if I could bring you in, if you've looked at the charts of Restaurants Brand, it has been a significant underperformer, as well as its peer, Jubilant Food. Any preference in that particular space?
Yeah, sure, Vivek. See, if we talk about restaurant brands, it's consistently, as you said, it has been consistently underperforming for the past 2 months. Right now, if we purely talk about the structure tells us that around the base of 60 rupees, it has a very strong support. So if anybody is looking to take a position in this counter, we'll have to wait for a while. We have to wait and watch how these things turn out, these updates turn out, and if the stock manages to give us a substantial turnaround from the these levels and probably go back above the 67, 68 mark, then definitely we can start seeing a turnaround in discounters. But for now, it's a complete avoid.
Okay, complete avoid. That's on Restaurant Brands Asia. Anand, anything from the QSR space, and what's your take on the sector overall?
Obviously, the sector has had somewhat muted gains in terms of recent performance. The year-on-year kind of same-store sale growth that we were witnessing, at least some of the companies, has seemingly tapered off. So the question really is, when will that return and what can cause the trigger? It is not immediately obvious, but most analysts, if you look at what they are looking at from the management's perspective, seem to indicate that the second half, you might find that some of the companies will be reporting slightly better growth. And from that perspective, this is a sector which could be a little interesting, more importantly, because if there is pressure in terms of earnings, in terms of consumption demand locally, this could be a little less affected because we are looking at the lower end of the demand curve, not really the premium end. Overall, it is still winding through the various, the overly ambitious valuations that it was working through. Perhaps it may take a little more time to walk through, but this is a space which still, I think, has a reasonably long road ahead.
Okay, all right. That's the take on QSR coming in from Anand. But the other sector which was on our radar is oil marketing companies. There was a downgrade that came from Investec. The brokerage has turned bearish on OMCs. All the three stocks have been downgraded to a sell. And the target price have come in at 330 for BPCL, HPCL at 425 and IOC at 145. They now prefer Reliance Industries to play the upcycle that we're seeing in the refining segment, and that's why they prefer Reliance over these oil marketing companies. We did see oil marketing companies see a surge because of higher refining margins in the last 3 months. These stocks were up around 20 to 25%. This is because Singapore GRMs, they have more than doubled in the last few weeks to $13 per barrel. However, Investec says this is only a part of the upcycle that we are talking about. While yes, diesel cracks are higher, this is something which is impacting diesel marketing margins as well. They were last week at levels of 4 rupees per litre, but because of the surge that we've seen in diesel cracks, there is an impact on marketing margins which have now turned negative. So despite crude being soft, the inability to move prices so much has led to negative marketing margins for all these oil marketing companies. And if diesel cracks remain elevated for these companies going forward as well, this is something which could pose material earnings risk, and that is something that Investec is worried about and bearish on the stocks as well. Anand, have you had a look at these names? What do you think of the oil marketing space and generally oil PSUs?
I don't understand the analysis. If you are looking at the retail price not changing and the fuel price falling, it doesn't matter how you break up between marketing and refining margins. The profitability of these companies don't change because finally it depends on what's the price at which you're buying crude and what the price you're retailing at. And I don't see the retail prices having fallen anywhere substantially. That said, obviously there will be ups and downs, but broadly, if you are looking at a situation where crude falls, a pure refinery will benefit better. And Reliance besides has multiple triggers. So to that extent, I would argue that buying Reliance is a good option, but not necessarily because of its OMC business, but also because of its retail and other businesses which are likely to be spun off and therefore can create value.
Okay. Siddharth, when you're talking about the charts, Reliance actually has outperformed the Nifty as far as the YTD performance is concerned. Do you see further strength for it from here on? And what about the OMCs? Do you feel that today's fall has probably started a downtrend or it could recover?
Yeah, sure, Vivek. See, definitely the other OMCs like BPCL and HPCL, they definitely look weak for now because there's been a sharp fall for the past 5-6 sessions consistently. And even now the next important supports are straight away at like more 3 or 5% more downside from here is particularly possible in the next 3-4 sessions. So OMCs are a complete avoid for now. Reliance is an except. Reliance definitely looks a buy because 1500 has acted as a very important support, and in fact even in the last couple of weeks the supports have shifted higher for this counter. I do think that this will be one heavyweight which will be taking the whole index on its shoulders. So Reliance is a clearly is clearly looking a buy right now. The other OMCs, BPCL, HPCL, they are a clear avoid.
Okay. Anything else from the PSU alt space, Siddharth, which looks interesting, maybe on the downside or the upside?
Yeah, definitely. Sonal, I do think that the PSU banking space is very attractive right now, and this is going to be one place which will be carrying the banking, index as well upwards in the future. SBI is very attractive, and I do think we'll be seeing the levels of 1,000 in the upcoming days in this counter. So SBI can be bought right now, even in the spot. The spot is trading around 930, 984, 983. Ish, we can buy it here. The stop loss will be at 970, and as I said, the targets will be above 1,000. The first target being 1,020, the second target being 1,040.
Okay, Anand, I want your view on this particular space as well, especially when you're looking at PSU banks. Do you think a large PSU like SBI can continue to outperform? It's had a very good H1 FY26. Can H2 also be equally good?
Yeah, I don't see why not. I mean, it is after all the granddaddy in the industry, and if the growth happens, then they are one of the few companies which have the ability to lend industrially. Most of the other banks in India either don't lend if they are private sector to industries, or if they are public sector, don't have the balance sheet to be able to lend to large projects. So assuming that you have a company like SBI, the size of the balance sheet will enable it to look at lending to very big projects without facing any constraints. That said, we are not looking at very strong credit growth so far. I mean, it has improved a little bit, but it still remains somewhat timid. If the credit growth were to go up, a company like SBI would be very well positioned.
Okay, all right, Anand and Siddharth, thank you so much for joining us today with your take from the fundamental side as well as technical levels on the Nifty and individual stocks as well. With that, it's time for a short break. When we come back, we'll get to the top corporate voices along with the key market events to watch out for on the other side of this very short break.
Welcome back to Markets Forward. Well, it's now time to take stock of all of the big corporate voices of the day. In a CNBC-TV18 exclusive, Steel Secretary Sandeep Pandrik has said that the government's decision to safeguard duty will be expected soon. Speaking to CNBC-TV18, Pandrik said that the domestic consumption growth has dropped to 9% this year. However, he expects demand to rise between 8 to 10% going forward.
Up next, Vijay Nirani, Managing Director at TrueAlt Bioenergy, says the company is in advanced discussions with Sumitomo for a partnership on a sustainable aviation fuel plant. He says the project will be funded through a mix of equity and debt, with TrueAlt targeting a 50 to 51% stake in the joint venture. The company also plans to set up a plant with 10 crore litre annual capacity for sustainable aviation fuel, which could add over 2,000 crore rupees in revenues. He adds that while all units are now operational, the firm may not deliver 50 to 55% growth this year due to shutdowns.
Embassy Development says that it expects steady growth going forward. With the new labour laws coming into effect, MD Aditya Virwani told CNBC-TV18 that the impact on labour costs would be in the low to mid-single digits, adding that the company has enough margin cushion to absorb it. On growth, he says 2 projects have already been approved by RERA in Q3. He also noted that the balance sheet remains strong, supported by the 1,300 crore rupees loan raised from Kotak in Q2.
And before we wrap, we bring you some key market events to watch out for. Gaurav is standing by with the key events to focus for tomorrow's trading session. Gaurav.
Well, yes. From the global market, if you look at the US market, we have got a few key data points which will be released tomorrow. First is the GDP data, then we have got initial jobless claims data, crude inventory is also something that we will be watching out for, and core PCE price index, that is also something that we will be watching out for. Apart from that, US bank regulator is going to finalize the relaxed leverage requirement for the banks, so that is also something that will keep the market on leash. Other than that, from the Indian market, watch out for HCC, IFL Finance and JNK Bank. All of these will have board meeting tomorrow where they will consider fundraising. Other than that, let's also watch out for Infosys, because tomorrow is the last day of 18,000 crores of share buyback that they had declared earlier. From the IPO market, now Excelsoft will get it listed on the in the market. Remember, the IPO size was worth 500 crores and the issue price was at around 120 per share, and the issue was subscribed almost more than 45 times. Lastly, NTPC Green. Now, this one company will be in focus, and the reason being that tomorrow is the day when 1 month lock-in period will end and around 69% of the equity will be floated. And lastly, let's also watch out for HDFC AMC, because company will be traded as X date of their bonus in the ratio of 1:1, and PFC tomorrow is the last day where they will where the company will have X date before their dividend. Remember, the dividend is 3.65 rupees per share. So let's watch out for all these companies in a trade tomorrow.
Well, thank you so much, Gaurav, for joining us and highlighting all the key events to watch out for in tomorrow's trading session. Well, with that, it's a wrap on this edition of Markets Forward. We will be back with more news and updates on the other side.